Not the kind you hear on social media where someone turns a small account into a fortune in 30 days. I am talking about the quiet story. The one that happens late at night, alone with the charts, when nobody is watching and nothing is glamorous. There was a time when charts felt like noise to me, candles moving too fast, indicators arguing with each other. Every tick felt personal, like the market was out to get me. I thought professional traders were born with some special vision, like they could see something I could not. That was the lie. A pro trader does not read charts better because they are smarter. They read charts better because they stopped trying to force meaning and started listening. At the beginning, most traders stare at charts the way desperate people stare at answers. You want certainty. You want reassurance. You want the chart to tell you what will happen next. But the market never speaks in promises. It only speaks in probabilities. A professional understands that early. Reading a chart like a pro is not about predicting. It is about observing without emotion. And that takes time. I remember the first real shift. It did not come after a big win. It came after a loss that did not hurt anymore. I followed my plan, took the trade, accepted the outcome, and closed the chart without anger. That moment taught me more than any indicator ever could, because that is when you stop reacting and start reading. A pro trader looks at a chart the way a doctor looks at an X-ray. Calm, neutral, focused, no excitement, no fear. Just information. They do not see candles as green or red. They see pressure. They see hesitation. They see aggression. Every candle tells a story about who is in control right now, buyers or sellers. And more importantly, who is trapped. Most beginners read charts like a movie. They want action. They want drama. Professionals read charts like a diary. Slow, honest, sometimes boring, but always truthful. Support and resistance are not lines on a screen. They are memories. They are places where traders felt pain or relief before. The market remembers those emotions even when people forget. When price approaches a level, a beginner asks, will it break? A pro asks, how is price behaving as it gets there? Is it rushing or crawling? Is volume expanding or drying up? Are candles confident or nervous? That is how charts speak. And here is the part nobody tells you. You do not learn this by watching more videos. You learn this by sitting through the same pattern hundreds of times. By watching it fail. By watching it work. By feeling the urge to jump in early and choosing not to. Discipline sharpens your vision. A professional trader does not chase moves. They wait for confirmation. Not because they are afraid, but because they respect risk. They understand that missing a trade is painless compared to forcing one. Reading charts like a pro means accepting boredom. It means sitting on your hands while everyone else is clicking buttons. It means knowing that your job is not to trade all day, but to protect your mind. The market rewards patience quietly. There is a moment you will reach if you stay long enough. The charts will slow down. Patterns will repeat themselves. You will stop asking, what should I do? And start asking, does this fit my rules? That is the moment you stop being emotional money and start becoming smart money. Professional traders do not trust their feelings. They trust their process. Feelings change every day, a process does not. And here's the hardest truth. Reading charts like a pro will not make you feel powerful. It will make you feel humble. Because the more you understand the market, the more you respect how little control you actually have. That humility is your edge. Every great trader has stared at charts feeling lost. Every great trader has overtraded, revenge traded, and doubted themselves. The difference is they did not quit when the chart stopped making sense. They stayed long enough for clarity to arrive. So if you are struggling right now, good. That means you are still in the learning phase. Confusion is not failure. Confusion is the doorway. Stop trying to win every trade. Start trying to read every trade. Ask why price moved. Ask who benefited. Ask who got trapped. Over time, the chart will start answering back. And one day, you will look at the screen and feel something strange. Calm. No rush. No speediness. That is when you will realize you are no longer chasing the market. You are listening to it. And that is how professionals read charts. There is a moment every trader remembers, even if they try to forget it. It usually happens late at night. The room is quiet. The chart is open. And price does something that makes no sense. You took the trade for all the right reasons. At least that is what you told yourself. The setup was clean. The risk was defined. And then the candle turns. Slow at first. Then fast, and before you can even process it, your stop is gone. That is the moment most people decide the chart is their enemy. You feel cheated. You feel targeted. You start talking to the screen like it can hear you. Why now? Why me? This always happens to me. And something dangerous begins to form in your mind. You stop seeing the chart as information and start seeing it as an opponent. That belief destroys more traders than bad strategy ever will. I know because I lived there. In my early days, I thought professional traders had some secret way of reading charts that protected them from pain. I believed they could somehow avoid losses if they were smart enough. Every time I lost, I assumed I missed something, some hidden signal, some magic confirmation. So I added more indicators, more rules, more complexity, And the more I added, the angrier I became, because the losses did not stop. What I did not understand back then is this simple truth. The chart is not reacting to you. You are reacting to the chart. A professional trader does not wake up thinking, how do I beat the market today? They wake up thinking, how do I read what is already happening? The market does not move to hurt you. It moves because millions of decisions are colliding at the same time. Fear, greed, urgency, hesitation, institutional orders, retail panic news, liquidity, all of it leaves footprints on the chart. Your job is not to control it. Your job is to observe it. The moment you stop personalizing price movement, your growth begins. Think about this. When price hits your stop, nothing special happened. The market did not change direction because of you. It did not see your order and decide to punish you. Your trade idea was simply wrong in that moment. That is it. No drama. No meaning attached. But the ego hates that explanation. The ego wants to believe losses mean you failed, that the chart exposed you, that you are not good enough yet. And so you fight back. You revenge trade. You jump into the next setup without clarity. You widen stops. You move targets. You try to take control of something that cannot be controlled. That is when the chart truly becomes dangerous. Not because of price, but because of what it triggers inside you. I remember the first time I heard a seasoned trader say, losses are information. I almost laughed. It sounded like something people say to feel better. But over time, I realized how serious that statement is. Every loss tells you something about timing, context, volatility, or your execution. But only if you are calm enough to listen. A pro trader reads the chart without emotional attachment. They are not hoping. They are not praying. They are not asking price to behave. They are watching how it behaves. There is a big difference. Beginners look at charts and ask, where will price go next? Professionals look at charts and ask, what is price doing right now? That shift changes everything. When you stop demanding certainty, the chart becomes clearer. You start noticing things you missed before. How price slows down before reversals. How strong trends breathe instead of moving straight. How failed breakouts tell more truth than successful ones. But you only see this when you stop being angry. Anger blinds traders. Fear blinds traders. Hope blinds traders. The chart does not need your emotion. It needs your attention. Here is something nobody teaches early enough. Reading charts is not a technical skill first. It is an emotional skill first. If you cannot sit through uncertainty, you will never read price correctly. You will see what you want to see, not what is actually there. That is why two traders can look at the same chart and take opposite trades. One is reading information, the other is projecting desire. Professional traders train themselves to accept one hard reality. Being wrong is normal. Once you accept that, the chart stops feeling hostile. Support and resistance are not magic levels. They are areas where traders made decisions before. Some won, some lost, some are waiting to get out. Price reacts there because memory exists in the market. When you understand that, levels stop being lines and start becoming zones of human behavior. And behavior is never perfect. Price overshoots, price fakes out, price hesitates. That does not mean the chart is broken. It means humans are involved. A beginner sees a fake breakout and feels betrayed. A professional sees a fake breakout and thinks, who got trapped? That question alone separates amateurs from pros. Because once you understand who is trapped, you understand where pressure will release next. This is why pros do not rush into trades. They wait for evidence. They wait for price to prove itself. They know that the first move is often a lie. The second move tells the truth. But waiting requires trust, not in the market but in yourself. Most traders do not trust themselves yet, so they cling to certainty. They want confirmation after confirmation. And when they finally enter, the move is already gone. Then they blame the chart again. Let me tell you something important. The market does not reward intelligence. It rewards discipline. You can be average and consistent and make money. You can be brilliant and emotional and lose everything. Professional traders do not feel special when they win, and they do not feel broken when they lose. That emotional neutrality is not natural. It is trained. They trained it by losing many times without quitting. They trained it by journaling honestly. They trained it by reviewing trades without excuses. They trained it by accepting that the chart owes them nothing. Once you truly accept that, the relationship changes. You stop trying to extract money from the market and start participating in it. That is when reading charts becomes easier. Candles stop looking random. You start seeing rhythm. You start noticing how trends pause, how ranges compress, how volatility expands before big moves. None of this is secret knowledge. It was always there. You just could not see it while you were emotionally involved. The chart did not change. You did. And that is the quiet truth behind professional trading. So if you are frustrated right now, that does not mean you are failing. It means you are still attached, still expecting, still fighting. The goal is not to win more trades. The goal is to stop fighting price. The day you stop seeing the chart as your enemy is the day you start reading it like a professional. This is not about becoming fearless. It is about becoming honest. Honest about risk, honest about uncertainty, Honest about your limits, because the chart will never lie to you, but it will always expose you, and that is where real growth begins. There is a painful truth most traders never want to hear. The market does not take money from people who are stupid. It takes money from people who are impatient. I did not understand this in the beginning. I thought patience was just a nice word people used when they did not know what else to say. I believed success in trading came from being fast, sharp, and always ready to act. I thought hesitation was weakness. Waiting felt like fear. That belief cost me years. In the early days, every movement on the chart felt like an invitation. Price would twitch and my hand would reach for the mouse. I did not want to miss anything. Missing a trade felt worse than losing one. So I entered early. I entered often. I entered without confirmation. And every time I told myself the same lie. I'll manage it if it goes against me. That sentence has destroyed more accounts than bad analysis ever could. Professional traders do not trade often. That sentence alone makes beginners uncomfortable. They think pros are constantly in the market, jumping in and out with perfect timing. The reality is the opposite. Pros spend most of their time waiting. Waiting is not passive. Waiting is work. Patience is not about doing nothing. It is about doing nothing until something makes sense. The market is open for hours, but opportunity is not. Most of the time, price is just moving. Not trending, not reversing, just moving. And movement alone does not mean opportunity. That distinction is where patience is born. I remember the first time I truly practiced patience. It felt wrong. The chart was there. The setup was almost there. That word almost kept whispering to me. Just enter now, you know it's going to break. But I stayed out. I watched price touch the level and pull back, then hesitate. I felt uncomfortable, restless, like I was missing my chance, and then it happened. A sharp move against what I expected. If I had entered early, I would have been stopped out instantly. That was the moment I learned something important. Patience does not just protect your capital. It protects your confidence. Every impulsive trade chips away at your trust in yourself. Every patient decision strengthens it. A professional trader understands that the market will always offer another opportunity. An impatient trader trades like this is the last chance they will ever get. That scarcity mindset is deadly. The market does not reward urgency. It punishes it. Look closely at losing traders and you will notice a pattern. They are always in a trade or looking for one. Silence makes them uncomfortable. Flat positions make them anxious. They feel productive only when they are clicking buttons. But trading is not about activity, it is about selectivity. A pro trader might watch 10 setups form and take one. A beginner might trade all 10 and wonder why nothing works. Patience is the filter. It filters out low-quality trades. It filters out emotional decisions. It filters out boredom trades. And boredom trades are some of the most expensive trades you will ever take. I used to think boredom was something to escape. Now I understand it is something to embrace. When you feel bored watching the chart, that usually means nothing is happening. And when nothing is happening, doing nothing is the correct decision. Professionals are comfortable being bored. They do not need constant stimulation from the market. They are not entertained by price movement. They are focused on context. They wait for alignment, trend, structure, level, behavior, timing. When those things line up, they act. When they do not, they wait. That waiting creates clarity. Most traders think clarity comes before patience. In reality, patience creates clarity. When you slow down, you see more. You notice how price approaches a level. You notice if momentum is strong or weak. You notice if buyers are confident or hesitant. These details are invisible to impatient eyes. Impatience rushes interpretation. Patience allows observation. Here is another hard truth. Impatience is often disguised fear. Fear of missing out. Fear of being wrong later. Fear that you are not good enough unless you are in a trade. A pro trader does not need the market to validate them. They do not trade to feel smart. They trade when the market invites them. Waiting is not hesitation. Waiting is preparation. There were days I sat in front of charts for hours and did nothing. At first, I felt guilty, like I wasted time. But then I started reviewing my journal. The days I did nothing were often the days I avoided unnecessary losses. Over time, those days became some of my most profitable, because capital preserved is opportunity preserved. Patience also shows up after you enter a trade, not just before. Many traders enter correctly and exit poorly because they cannot sit with uncertainty. A small pullback feels like danger. A pause feels like failure. So they cut winners early and let losers run. Professionals do the opposite. They are patient with winners and ruthless with losers. That sounds simple, but emotionally it is very hard. Holding a winning trade requires trust. Cutting a losing trade requires humility. Both require patience. When you read charts like a pro, you are not just reading price. You are reading yourself. You notice when you want to interfere, when you want to move stops, when you want to take profits too early. Those urges are signals. Not from the market, but from your psychology. A patient trader listens to those signals and does not obey them blindly. The market tests patience constantly. It will give you setups that almost work. It will move one tick away from your entry and then run without you. It will tempt you to chase. Those moments are not accidents. They are lessons. Chasing feels logical in the moment. I don't want to miss it. But every chase trade reinforces impatience. And impatience always comes with a bill. Professional traders accept missed trades without emotional reaction. That ability alone puts them ahead of most participants. Missing a trade does not mean you failed. It means you respected your rules. Rules exist to protect you from yourself. Patience is the muscle that allows rules to work. You do not build patience by reading about it. You build it by feeling discomfort and not reacting. By watching price move without you and staying calm. By sitting on your hands while your mind screams for action. That discomfort is training. Every time you wait instead of forcing a trade, you are rewiring your behavior. Slowly. Patience becomes natural, silence becomes comfortable. The urge to overtrade weakens, and something interesting happens. When you trade less, you care less about each individual trade. When you care less, you think clearer. When you think clearer, your decisions improve. This is why professionals look calm. It is not because they do not care. It is because they care about the right things. They care about process, not excitement. They care about consistency, not thrill. They care about longevity, not bragging rights. Patience aligns you with those values. One day you will notice a shift. You will open the chart and not feel rushed. You will wait for price to come to your level instead of casing it. You will let candles close. You will respect time frames. And when you finally enter, it will feel quiet, almost boring. That is how you know patience has become part of you. The market will still be uncertain. Losses will still happen. But you will no longer feel desperate. You will feel grounded. Because patience teaches you something no indicator ever can. You do not need to catch every move to succeed. You only need to catch the right ones. And the right ones reveal themselves only to those who are willing to wait. There is a stage every trader goes through where profit feels like the goal and risk feels like an obstacle. You look at a setup and the first thing that flashes in your mind is how much you could make. Your imagination runs ahead of price. You see the target hit before the trade even starts. And in that moment, risk becomes an afterthought. That mindset is innocent at first, but it is also dangerous. I used to think risk management was something you worried about after you learned how to make money. I thought pros focused on profit and used risk control as a safety net. That belief was completely backward. Professional traders do not think in terms of profit first. They think in terms of survival, because profit is optional. Survival is not. In the early days, I measured my progress by how big my winners were. I felt proud when I caught a large move. I felt smart when I doubled my account quickly. What I ignored was how fragile those wins were. One bad day could erase weeks of effort, and eventually it did. That was the lesson. Loud, painful, unavoidable. A professional trader understands one thing deeply. You do not make money by winning trades. You make money by controlling losses. That sentence sounds simple, but living it is hard. Every trade has two outcomes you can control and one you cannot. You can control where you enter. You can control where you exit if you are wrong. You cannot control what the market does next. Risk control is about accepting that reality before you click the button. Most traders enter trades hoping they will manage risk later. Pros define risk before they enter. If the risk does not make sense, the trade does not exist. No negotiation. No adjustment. No emotion. That discipline is what keeps them alive during losing streaks. Losing streaks are inevitable. They are not signs of failure. They are part of the business. But without risk control, a normal losing streak becomes catastrophic. I learned this the hard way. I remember a period where everything felt off. Setups failed. Levels broke and reversed. I kept telling myself it would turn around. I increased size to make back losses faster. I moved stops because price will come back. And each decision felt justified in the moment. By the end of that week, the damage was not just financial. My confidence was shattered. I no longer trusted my judgment. The chart felt hostile again. That experience taught me something critical. Risk control is not just about money. It is about protecting your mental state. A large loss does more than hurt your account. It changes how you see the next trade. You hesitate. You rush. You second guess. That emotional damage lingers. Professionals design their risk so that no single trade can harm them emotionally. They size positions so losses are boring, ordinary, forgettable. If a loss feels dramatic, the risk was too high. This is where many traders misunderstand confidence. They think confidence comes from winning. Real confidence comes from knowing you can lose and still be fine. When you know the worst-case scenario before you enter, fear loses its power. Risk control gives you permission to be wrong. And being wrong is unavoidable. Professionals assume they will be wrong often. They build systems that function despite that. They do not need a high win rate. They need consistency. They need discipline. They need risk defined. Every trade is just one of many. No trade is special. No trade deserves extra size. No trade deserves hope. Hope is not a strategy. A pro trader asks one question before every trade. If this fails, am I okay with the loss? If the answer is not a calm yes, they do not take the trade. That question alone would save most traders years of pain. Risk control also creates clarity. When you know exactly where you are wrong, you stop debating with the chart. You stop arguing with price. You stop watching every tick. You place the trade. You accept the risk. You let the market decide. That emotional neutrality is priceless. Without it, you micromanage trades. You interfere. You sabotage good setups with bad behavior. Many traders blame their strategy when the real issue is risk behavior. The strategy might be fine. The execution is not. Professionals understand that execution quality matters more than prediction accuracy. They do not widen stops to avoid losses. They accept losses to protect capital. They do not increase size to recover faster. They reduce size to regain clarity. They do not trade to feel something. They trade to execute a plan. Risk control is the foundation that allows everything else to work. Here is another truth people do not like. You can be profitable with a mediocre strategy and excellent risk control. You cannot be profitable with a great strategy and terrible risk control. Risk magnifies behavior. Good behavior gets rewarded. Bad behavior gets punished faster. That is why traders blow accounts even when they know what they are doing. Knowledge without discipline is dangerous. Professional traders respect drawdowns. They monitor them. They adjust when necessary. They step back when conditions change. That ability to slow down is a form of risk control too. Sometimes the safest trade is no trade. There were periods where I stopped trading entirely. Not because I lost confidence in the market, but because I lost clarity in myself. That decision saved me more money than any winning trade ever did. Risk control includes knowing when not to participate. The market will always be there. Your capital might not. Once you truly prioritize risk, something shifts. You stop fantasizing about profit. You stop forcing outcomes. You stop measuring success trade by trade. Success becomes consistency over time. A good day is not a big win. A good day is following your rules. A good week is not profit. A good week is controlled losses and clean execution. Over time, profit becomes a byproduct of discipline. That is how professionals think. They do not chase money. They protect process. And when process is protected long enough, money follows quietly. Risk control does not feel exciting, it feels boring. Repetitive, almost restrictive. But that boredom is safety. That safety is what allows you to stay in the game long enough to grow. So if you are struggling right now, ask yourself this honestly. Are you trading to make money, or are you trading to survive? If survival is not your first priority, the market will make it one for you. Because in trading, longevity is the real edge. And longevity is built on risk control. There comes a moment in every trader's journey when they realize something uncomfortable. The market is not the hardest part of trading. You are. At first, that truth feels insulting. You want to believe the problem is the strategy, the broker, the news, or the manipulation. Anything except you. I know, because I spent years looking everywhere else. I changed indicators. I changed time frames. I changed markets. I even changed personalities trying to trade like people I admired. No matter what I changed on the screen, the same problems followed me. Fear, overconfidence, impatience, doubt. That is when it hit me. The chart was never the real battlefield. My mind was. A professional trader does not have better emotions than you. They have trained responses to those emotions. They feel fear, greed, excitement, and frustration just like anyone else. The difference is they do not let those emotions make decisions. Most traders try to master the market first. Professionals master themselves first. Your mind is always talking when you trade. It whispers when price pulls back. It screams when price moves fast. It negotiates when your stop is close. It panics when a loss hits. If you are not aware of that inner dialogue, it will run your account. The market exploits untrained minds. I remember a trade that changed everything for me. It was a clean setup. Clear level, strong structure. I entered according to plan. And then price pulled back slightly. Nothing unusual. But my mind started racing. What if it reverses? What if this is another loss? I closed the trade early for a small profit. Minutes later, price exploded in my original direction and hit the target perfectly. That trade hurt more than a loss. Because the market did exactly what I expected. I just could not sit through the discomfort. That was the moment I understood something critical. Technical skill means nothing without emotional control. A professional trader trains their mind the same way an athlete trains their body. Repetition, awareness, review, adjustment. They do not try to eliminate emotion. They learn to observe it without acting on it. Fear is not the enemy. Acting out of fear is. Greed is not the enemy. Acting out of greed is. The goal is not to feel nothing. The goal is to feel and still follow your plan. This is why journaling matters. Not just recording entries and exits, but recording thoughts. What you feared, what you hoped. Over time, patterns appear. You start seeing the same mistakes repeating. Not because the market tricked you, but because your mind did. Awareness creates choice. Without awareness, you are reacting. With awareness, you are deciding. Professional traders slow their thinking down. They create rules to reduce decision-making in the moment. They know that under pressure, the mind looks for comfort, not correctness. Rules protect you when emotions are loud. This is also why pros accept uncertainty. They do not need to know what will happen next. They only need to know what they will do if they are wrong. Uncertainty does not scare them because it is already priced into their plan. When you accept uncertainty, you stop fighting the market. You stop trying to control outcomes. You focus on execution. Execution is mental. There were times when I had the perfect setup and still did not take the trade. Not because it was wrong, because I was not in the right mental state. Fatigue, frustration, ego. Professionals respect those signals. They step aside when their mind is not clear. That discipline is rare. Most traders think being strong means pushing through emotions. Real strength is knowing when not to trade. Your mind needs rest, it needs distance, it needs routine. Sleep, health, and structure matter more than people admit. A tired mind trades emotionally. A stressed mind seeks relief through action. Professional traders protect their mental capital as fiercely as their financial capital. They do not watch charts all day. They do not chase every move. They have boundaries. Those boundaries create longevity. One of the biggest shifts happens when you stop measuring success by money and start measuring it by behavior. Did you follow your plan? Did you respect risk? Did you wait patiently? Did you exit without hesitation? Those questions matter more than profit in the early stages. Because profit without discipline is temporary. Discipline without profit becomes profit over time. The mind also plays tricks after winning. Confidence turns into overconfidence. Size increases. Rules loosen. Professionals are just as cautious after wins as they are after losses. They know emotions do not disappear when you are winning. They just change costumes. A calm mind sees the market clearly. A noisy mind sees danger and opportunity where none exist. Mastering your mind does not happen overnight. It happens trade by trade, choice by choice, moment by moment. Every time you follow your plan despite discomfort, you strengthen control. Every time you break your rules, you weaken it. The market is a mirror. It reflects who you are under pressure. If you are patient, it rewards patience. If you are disciplined, it rewards discipline. If you are emotional, it exposes emotion. That is why trading is such a powerful teacher. It forces honesty. You cannot fake consistency. You cannot hide from results. But if you stay long enough, if you stop running from discomfort, something shifts. The chart becomes quieter. Losses feel manageable. Wins feel normal. You stop chasing and start waiting. You stop forcing and start allowing. At that point, you are no longer trying to master the market. You are mastering yourself. And that is when trading changes from a struggle into a craft. Not easy. Not perfect. But honest, that is what professional trading really looks like.